Picture this. You are looking at the headquarters of the largest sovereign wealth fund in the Middle East. $925 billion in assets. The engine designed to build Saudi Arabia's entire future. But behind those glass walls, something has gone catastrophically wrong, and the numbers they tried to bury are now impossible to hide. Just 1 minute ago, financial analysts confirmed what sources inside the fund have been warning for months. The public investment fund has lost over $8 billion on its domestic investment portfolio, and the bleeding has not stopped. The fund that was supposed to wean Saudi Arabia off oil is now the single biggest source of financial hemorrhage in the kingdom. But here is what the Saudi government desperately does not want you to discover. This is not bad luck. This is not a market downturn. This is a sovereign wealth fund being used as a personal checkbook for projects that were never designed to make money. In this video, I will expose exactly where those $8 billion went and why none of it is coming back. Reveal the internal audit findings that the fund tried to suppress, and show you why one former advisor described the fund's strategy as the most expensive experiment in economic history. The wealth fund that was supposed to save Saudi Arabia is now the thing that might bankrupt it. According to the PIF's own disclosures, the fund manages approximately $925 billion in total assets. Under Crown Prince Mohammed bin Salman's direction, the fund shifted aggressively toward domestic mega-projects, starting in 2017. Before that shift, the PIF was a conservative sovereign fund. Quiet, profitable, boring by design. After the shift, the fund became the primary financier of Vision 2030. NEOM, The Line, Qiddiya, Red Sea, Global. Every single mega project ran through the PIF. The fund was no longer investing. It was subsidizing. The fund poured over $50 billion into NEOM alone. $50 billion into a project that has built 2.4 kilometers of a promised 170. Bloomberg reported that internal PIF analyses showed return projections for NEOM were revised downward 7 times between 2019 and 2024. 7 times, each revision worse than the last, and they kept investing anyway. The losses are spread across the entire Vision 2030 portfolio. Qiddiya Entertainment City has consumed billions with no revenue in sight. Red Sea Global, the luxury tourism venture, has built resorts that sit largely empty. Occupancy rates reportedly below 30%. Billions invested in hotels with no guests. Diriyah Gate, the cultural district project, has faced repeated cost overruns and timeline extensions. Every single flagship domestic investment has either lost money, missed targets, or both. The Financial Times reported that a confidential internal audit found what it called systematic overvaluation of domestic assets. Systematic overvaluation. That means the fund has been telling itself its investments are worth far more than reality, and telling the world the same lie. The entire portfolio has been inflated. One financial analyst told Reuters that the gap between reported value and real market value could be as high as 40% on some domestic holdings. To understand how the largest wealth fund in the Middle East became a money pit, you have to trace the decisions. In 2016, the PIF was restructured as the central vehicle for Vision 2030. Overnight, its mandate changed from wealth preservation to nation building. The fund went from investing in global blue-chip stocks to financing desert cities that existed only as concept renders. By 2018, the spending acceleration was unprecedented. Billions flowing out monthly. Projects with no business model and no revenue timeline were being funded at record pace. A former PIF portfolio manager told the Wall Street Journal that normal investment due diligence was essentially bypassed. Projects that would normally require years of feasibility analysis were approved in weeks. The directive came from the top: build now, ask questions later. Then 2020 hit, oil crashed. But the PIF spending did not slow, it actually accelerated. The government transferred 8% of Saudi Aramco shares to the PIF to keep it solvent. That transfer was worth roughly $150 billion. $150 billion in oil company shares handed to a fund that was supposed to build a post-oil economy. The irony was lost on nobody. Oil money funding a post-oil dream that still depends entirely on oil. By 2022, internal assessments showed that domestic investments were consistently underperforming international ones by double-digit margins. The international portfolio generated positive returns. Stakes in Uber, Lucid Motors, and global tech firms performed well. The domestic portfolio was a black hole. Every dollar invested domestically underperformed its international equivalent. By 2023, the fund began quietly selling international assets to cover domestic losses. They sold their entire stake in a major European entertainment company, reduced positions in several U.S. tech firms, liquidated real estate holdings in London and New York. The profitable portfolio was being dismantled piece by piece, selling profitable global investments to prop up unprofitable domestic vanity projects. That is not a wealth fund strategy. That is a bailout. And in 2024, the $8 billion domestic loss figure became impossible to obscure. But here is where the story becomes something far more troubling than bad investments. What happens when a nation's entire retirement fund is being gambled on projects that will never generate returns? The PIF is not just an investment fund. It is the financial backbone of the Saudi state. Pensions, social programs, government operations, they all depend on PIF returns to function. When the fund loses $8 billion, it is not shareholders who suffer. It is ordinary Saudi citizens whose future depends on that money. $8 billion, that is enough to build 40 major hospitals, or fund the entire Saudi education budget for a year. Meanwhile, Norway's sovereign wealth fund, roughly the same size, generated a 16% return in 2024. Saudi's PIF posted domestic losses. Same asset class, same global market conditions, opposite results. The difference is governance. Norway invests based on independent analysis and transparent governance. The PIF invests based on directives from the Crown Prince's office. No independent oversight, no public accountability. A former senior PIF analyst told Bloomberg that investment committee recommendations were routinely overridden by political directives. The leadership has decided. Proceed. That single sentence explains $8 billion in losses. Now, to be fair, the PIF has made some genuinely successful investments internationally. Their early stake in Lucid Motors generated significant paper returns. The fund's position in various global tech companies has performed well. These international successes prove the fund's analysts know how to invest. The problem is not competence. The problem is interference. When professional analysis says no, but political ambition says yes, money disappears. $8 billion worth of it, and the trajectory is not improving. Analysts at J.P. Morgan estimated the PIF would need oil above $90 for 5 consecutive years to recover its domestic losses. With Brent crude trading around $74, that recovery scenario is a fantasy. The fund is now caught in a trap. It cannot sell the domestic assets because nobody will buy them, not at the values the PIF has reported. The gap between paper value and real value is a chasm, and it cannot write them down because admitting the real losses would trigger a confidence crisis in the kingdom's entire economic strategy. So here is the verdict, and it is not what they want you to hear. The public investment fund has not made a bad bet. It has been systematically converted from a sovereign wealth engine into a political instrument. $8 billion in domestic losses is not a rounding error. It is a generational theft from the Saudi people. Money that should have been growing in global markets was instead poured into desert construction sites that will never generate a return. They told you the PIF was building the future. Instead, it was burying the present. You deserve to know where $925 billion of sovereign wealth is actually going. What is your take? Can the PIF recover, or is the damage already permanent? Tell me in the comments. If you want the truth about where Saudi Arabia's money is really going, subscribe now, because this is just one fund. Wait until you see what happened to the national budget.